There's news from China today about their gold reserves. They're much bigger than expected, and they have grown from 600 to 1084. And they're now the the fifth largest gold bullion owner in the world, just before Holland. And there's lots of aspects about it. Apparently, according to the article I have next to this video, I have two articles next to this video for a special reason that I'll explain a little bit later. China might buy the IMF gold, the 403 tons that they pledged to sell, to have money for helping third world countries. Apparently there's no discussion of selling all the gold of the IMF, which was suggested by China and India before, which was by me hypothesized to cause a huge problem, of course, if the IMF wouldn't have any gold anymore. But that's not on the table. What is on the table is that China is buying gold, and they're buying big, and their intention to buy a lot. But the funny thing about this is that the first time I heard about this or read about it was in the Bloomberg article that I've linked next to this video, in which the representative in China said that their ambition was to buy a total of 5,000 tons of gold. This is important news, I guess, for all people that hold gold, because then you know that even if the IMF were to sell all their gold at once, and even if they were to sell it all to China, they wouldn't have enough to quench their thirst for gold, let's say. They would still be more than 1,500 short or something. And that's also the reason why a guy from the UBS said, if China chooses to go on the open market because it doesn't get a good price directly from the IMF, or it doesn't buy the gold from the IMF, period, then of course it has to buy it, in slow portions, not to drive the price up, of course, because it's a huge demand that they have there. And the funny thing about that is that it is that remark about the 5,000 tons is no longer in the Bloomberg article, but I did find it in the Washington Post article, because I thought, am I crazy? Why is that remark gone? But it is gone, and I guess it's of course hugely important to know what the target of China is, what they're trying to achieve, and what the impact that will have on the gold market. Because of course, if gold is going to have a strong pulling force, a strong rise in price, or at least a lot of demand, taking it out of the market in a period that people are trying to hedge against inflation by buying gold, then that puts a lot of pressure on the suspected COMEX gold price manipulations that have been going on. There's the story of a lot of people that have reported that Goldman Sachs and actually 3 banks in the US are controlling the price of gold by short selling gold when it rises too much, and then people get demotivated and they drop their buying behavior of the gold, and the gold price drops again. And so they try to keep it in a certain range to make sure that the dollar retains its value against the gold. Well, if China starts buying gold like mad, and of course wherever they buy it, there will be a kind of a vacuum that can be filled, and increased demand that will drive the prices up. Even if it's only slightly, it's quite consistent. And that way they might be able to break that control over the gold price, which in turn then will make it very clear how valuable the dollar is, or has become, basically worthless. And maybe that's a strategy of China. And announcing the demand is almost the same as saying that they will try to buy all the IMF gold. And it's funny, I think, that it was no longer to be read in the Bloomberg article, and has not yet been removed basically from the Washington Post article.